morning at let's see, 8:30 o'clock, 8:30 a.m. Pacific time, and we got Dr. K here from London. So interesting machinations in the market. I thought today's Supreme Court decision was actually a shocker, and the fact that they upheld the insurance mandate provision as a tax, and even though they say it's unconstitutional as a mandate of forcing people to buy insurance under the Commerce Clause, but so anyways, it sends the market down. I think volume right now is up. Dr. K, what's the volume looking like right now?
We're pretty big right now. I haven't checked recently, but last I did, we were quite a bit. Yeah, 10% on the New York and 8% on the Nasdaq above yesterday's volume.
Yeah,
not surprising.
But I would think though that for the market to it should be blowing apart if this is really that bad. And so I just watched this because I think you have the potential for a shakeout. You know, for myself, I've been watching my stocks, and for the most part, they've been acting okay within their ranges. I've been long a few positions here, and some have been doing okay lately. Today's probably the first day where you've seen some of them come down, more than 1% or so. But we'll just see how this pans out. I'm not inclined to really make any big moves one way or the other, and I'm not inclined to go short the market here myself in terms of stocks because I don't see a heck of a lot setting up, and I think it becomes a little bit too obvious. As far as the market direction model goes, you're just barely under the sell signal at 28.55. Nasdaq's trading here at 28.37, and you're just below that signal, so it's still working, and we'll just see what happens here. But I think it's kind of fluid, so we'll just kind of see how it goes. You know, for those of you following the market direction model, you're on the sell signal until I believe what's the fail safe 29 or 29.19? Is that it, Dr. K?
Well, it's fluid, but basically the fail-safe was over 2,900. Now I'm going to reduce it to under 2,900 because the market is where it is right now. So in other words, as the market goes lower, that fail-safe starts to, it's a sliding fail-safe. But the idea generally is not once you have a profit, the model will switch signals before the fail-safe is activated. And that's in the past history of the model. So my guess right now is that the fail-safe will not be activated. And the model will just end up switching into cash or buy signal, as the days play out.
Okay.
But also, it's an interesting, this big, Obamacare issue. We're in a riptide environment, and there's so many of these cross currents that are hard nosing the markets up and down, and you can see, this propping effect where there's a safety net, this quantitative easing safety net, but also the factor that this passage of law, perhaps it's not a popular issue with the voters, and so this could be the tipping point for voting Obama out. And if the market perceives that, and the market looks forward by several months, if the market perceives this, then we could see a rally akin to the one we saw in 1980 prior to Reagan being elected.
Yeah, and so it's just a fluid, messed up situation. But there are a few stocks making some progress, not a huge number, but also the breakdowns that occur you see in a lot of older leaders. And so we see yesterday, for example, Chipotle Mexican Grill. There's a lawsuit brought against them claiming that their ingredients are not as healthy as they claim they are. Imagine that. And so the stock broke down. But I think there's two ways to look at it. There's also an analyst came out and said their sales are slowing down. My view is if you have an analyst or some news about a lawsuit occur and you see a stock break down, it should recover. And this kind of break, when you see this kind of break on that kind of volume, that's trouble. And it was starting to look like it was setting up maybe to set up in a new base, but it changes very quickly, and you have to react to that. And so I think the huge volume and the break of the 50-day moving average after this pocket pivot pretty much sets you out of this one in a hurry. But remember, Chipotle Mexican Grill has had a huge move. Let's take the weekly, and really, this is the weekly chart from 2000. So it's had a huge move, and there are a number of stocks like that. I might look for some rotation out of some of these older leaders and into newer merchandise, and that's kind of where I've been focusing. And some of the better stocks, and I'm just going to go through what I've been seeing here in the market. I think Coinstar is acting pretty well. You had a couple of pocket pivots. We told you about this, and of course it's pulling right back on top of the breakout point yesterday. You didn't have a lot of volume on the breakout. I think it was 22% above average, and you'd like to see bigger volume, but I think today's pullback might be a buying opportunity in the stock. My view is if it holds up here above 65 or so in the 10-day moving average, it's probably okay. And I think the story here has some potential going forward. The other beautiful thing here is that there's about 8.7 million shares of the stock been sold short, and the shorts have been swarming it, and you've only got a float of about 30 million there. So that's one I think that comes to mind. You know, there's a it's showing up here on my screen here. Other than that, I think Mellanox is another strong name, I think, fundamentally, and it's basically holding the top of this breakout here, roughly in the 20-day moving average so far. You do, I guess you wouldn't say, could be considered not really a violation of the 10-day, but I don't think that's really relevant yet because you're trying to break out. You might actually find that you get stronger support down in this area where you have a confluence of congestion here. And I think what happens is it could pull down. If the market's real weak, you see it pull down, but that's really a question of where the market goes from here. But it's hanging in there okay. Facebook, which is a name we've been in off and on, and it's just pulling back. You know, it ran up very sharply off the low, so it's entitled to create a handle here. We'll see how this goes, and if it makes sense, it's going to do it during the market having about a weakness here after the Supreme Court decision. I would see how this occurs. It might be viable in here, undercutting, but we'll have to see how it acts. It seems to me like it might need more time from here, but I think the story on Facebook is still wide open, and the fundamentals, as far as them being able to monetize their existing subscriber base, which they say is approaching 1 billion people, 1/5 of the planet, there is a lot of possibility there. I've heard that their movement away from these Facebook credits or whatever this Facebook money was into doing what they do with the iPad and iPod and iTunes, basically, where you have an account and you can use up credits there or money there. And they're going to be doing the same thing. So they could move into the payments area, and that's one thing that's been cited as potential positive for the stock going forward, or that could be a catalyst. For now, though, you've had this move, and I maybe take away these couple of days, and you're looking at a little cup and handle. This may have to go sideways, or it might break down. It depends on what the market's going to do at this point. But right now, you're not seeing things selling off harder. You can see the Dow's off 127, Nasdaq's off 38. That's a pretty good break, but what it looks like on a index chart is basically this, and you're finding some support here off the lows today. We'll just have to see how it pans out. Volume's up 10%. You're trying to come up off the lows today. We'll just see how it plays out. So let's see some other stocks that have been acting decently. LinkedIn has been. Let's get out of here. Actually, you want to look at a daily chart here. It's been holding along the 50-day moving average, and you can see it gets some support in here. Off the 50-day today, trading off the lows. Not a lot of selling comes in. It may just track sideways. I think if it broke down and violated or busted the 50-day on some volume, that would be a signal to get out. But it's not really doing much anything here, going sideways here. There are some other names, like let's look at Apple here. Here's Apple in this position. You know, is this going to be a head and shoulders and this thing breaks down like CMG? I think that's something to watch out for. Apple is an older name, and it's been running for a while, but right now you're 35% below average on the volume, and I think that the potential for it to break down, you see the 50-day, it's blowing through the 50-day today, which has dropped down to 572, the 50-day has, so you're 569 and change, you're below it. So, you know, if you think the market's going to come apart here, you might try shorting something like Apple, because as a market name, as a market stock, I think the potential for it to break with the market and test this low again is a possibility, but it's something to watch out for. For those of you who are adventurous, you might use the high at 574 as a stop and come after it if you think the market's going to roll over, in lieu of taking a position in, say, an ETF, because it's just kind of like a 3 times ETF on the Nasdaq 100 for the most part. That's kind of how it acts. Let's see, what else? Anything else looking really exciting here? Let's see, Q-Core, which you know, it finally has a break under 50. I think that's where it might become viable. I like that pullback because it's retracing about half of the distance from the breakout, so it might have been viable this morning. So far it's looking like it was, but you just have to see how this pans out. But I think this is a strong name, and I'd watch to see how this pulls back and whether it settles in with volume drying up on the pullback. You can definitely see that's trading mid-range on the day right now, so it looks like it's pretty positive in terms of picking up support off the lows of the day as the market's getting whacked. So that's a constructive name. But there's very few names out there that look really viable. I think if you're a stock picker and I've been in some of the right names to be in Facebook off the lows, and Mellanox coming up through 60. Coinstar coming up through 64, 65 on that pocket pivot, and so those have held above my entry points. So it kind of puts me in a position of being neither here nor there in terms of having to bail out of those positions necessarily. And I want to see how this pullback pans out. So I wouldn't, like I said, I wouldn't panic and run it, because it's possible it sets up the potential for a backlash that sends Obama out of office. So, and then I want to emphasize that when we talk about the political aspect, we're only talking about it in terms of an objective assessment of how an administration's policies affect the economy. And I don't think that the Obama policies help to undo any of the previous mistakes made by previous Congresses and administrations. And I know some people get their back up, but keep in mind, everybody wants to blame Bush, which I think is a lame argument, because we already know that he didn't do such a great job, and Obama has pretty much poured fire or fuel on that fire. And we did have a Democratic majority in Congress the last 2 years of the Bush administration, so I don't think any of that washes. I think both political parties are at fault here, but when we're focusing on the potential for change, I think you have to look at the potential for Obama to lose the election, and the market's seen some relief in terms of the regulatory overhang on the economy coming off. Victor Sperandeo, some of you, am I pronouncing that right, Dr. K? Sperandeo? I mean,
I've always heard it as Sperandeo.
Sperandeo, yeah.
I think it's got a couple pronunciations, so
we'll
ask the man himself.
Yeah, I guess so. But I saw him on CNBC the other day, and I rarely watch TV, but I think I had it on because I wanted to be aware of some news event that was occurring. I forget what it was. Maybe it was Monday or Tuesday. But he came on and said that he believes you would have a huge rally once the market realized that Obama is out of office. And that's not to say that Romney represents some grand solution to the things that are creating big debt problems for the U.S. There's still this fiscal mess, but the fact is a lot of companies out there are lean and mean because companies cut back and deleverage. Individuals, for the most part, cut back and deleverage. The government doesn't. And what happens is companies are lean and mean. You get a turn in policy and boom, everything could be off to the races. That's the outside possibility, and I think it's something you got to watch for here. And that's just our assessment based on what happened in 1980 when you had the Reagan rally. And the only period in my lifetime that seems similar when the country was in a big malaise like it is now is the 1970s and Reagan helping to get out of it. We can go get into a big argument about all his policies too, since he did increase the debt by a large margin. Of course, we know David Stockton, the director of the CBO, resigned back then, and today he's pretty much a kiss and tell type of guy telling you about his views of all of this fiscal profligacy that we have seen in the government. But in any case, that's a potential outcome. I think some of these stocks have run up pretty good, and maybe they're entitled to a little sideways movement and shaking around if they're going to go higher. But I think the jury is still out. So we covered Q-Core for you. I'm going to go through some questions because there really isn't a lot other than outside of watching to see what goes on here. SolarWinds, a name I've never really trusted just because it's real volatile. You had some pocket pivot type action in here, but it doesn't really pan out. It's a little wedgy. I don't know. I'm not a buyer here, but if you own it, it should hold this low here. That's what I was looking for. VMware. Somebody asked, is that a short? No, I wouldn't consider that a short because it hasn't really failed. VMware we talked about as a short sale setup to keep in mind as it's pushing up into the 10-day, and of course that has worked out, and it's breaking out to the downside. So, if you want to try and short it here, I think you're going to need the market to break down for you, but consider it is down a fair bit here, and I think the jury is still out in terms of whether this thing is going to just bust wide open. I mean, this is what you look like right now. It's kind of I don't know what you call this. This is a head, I guess, but little shoulder here is starting to break down. It seems a little bit obvious. You've got some supporting levels in here all over the place. So if you're short this thing, you would stay short. I would guess that it's going to stay below the lows here, which would be 86, 87 from here. So that's something I would be watching for. F5 is another one. It's doing the same thing. Basically what I was looking for when I picked these out as potential targets to keep on your watch list. Just looking for these sort of flags, these bearish flags, and stocks that have remained weak and not really participated in the rally off the June lows that we saw in the indexes. So this is pretty weak. Nice outside reversal. Looks like it wants to break the 95 level. If you short it, you know, you're probably using a 4 or 5% stop. I probably would use, I think, somewhere in here, maybe 96, 97 as a stop. Just keep it pretty tight, 2-3%. Because like I said, you don't know what this market's going to do. It's not blowing apart. There's a possibility if it doesn't blow apart that it comes around and starts to turn back to the upside and fakes everybody out. It's been that kind of a market. We know that. So keep in mind you've got QE still out there, and if things start to get really hairy, the Fed might step in that way. But again, the market is looking out several months, and what it starts to see is really what's going to be key here. So we'll just have to see how this all pans out in the short term. Anyways, I hope that answers the questions on those stocks. Alexion is, you know, holding on top of the breakout. That's all you know right now. So here's your gap up breakout, and it's holding the top. So, you know, if you think the market's going to blow apart and you want to take profits and get out of your longs, you can always do that. So Ulta Salons comes down and it's holding the 50-day so far. If it blows through that, then that might be a reason to unload the stock. But that's really all you're seeing. So we can't tell you what these things are going to do from here, but that's really all you're looking at. Okay, I got a question for you. Have you had
before the question, I wanted to make one mention on ULTA. It's kind of a nice sell because the low of the gap up day is 90.84, and the 50-day moving average is 90.75. So essentially, if you own this, I'd be selling it as it breaks through the low of the gap up day. So in other words, I'd be putting my stop probably at like 90.79, or it's just below the 50-day, which would be like 90.65, something like that.
Yeah, that works. All right, let's see what else we got. Chris, have you had an opportunity to look at the VIX information I sent you, i.e., ration of VIX to its 10-day moving average? What is that?
Oh yeah, that's the that was some data that when the VIX goes below its 10-day by a certain percentage, typically 10 to 15% or more, that usually sets up a there's a higher predictive value that the market's going to rally, and vice versa. When the VIX, the market's going to sell off when the VIX is under its 10-day by that amount. Now, when the VIX is above its 10-day, typically by 10 to 50% or more, then that sets up a rally in the market the following week. I've looked into it. You know, the problem, there is statistical validity to it, but the issue there is if you look at some parts of the market where it really has a bad break, like August of 2011, and you use that technique, you'll end up trading out of your position, because you'll see that the VIX was, let's see, I'm just going to pull it up here. The VIX in August had a huge spike early on, where it was well above its 10-day moving average. And so if you had used that as your guide to say, okay, well, the market next week is going to therefore be up, you'd be hugely underwater in the position, because as we all know, that was just the beginning of a huge slide. And I've looked at some other slides that are pretty serious, and the technique doesn't really work very well for those types of situations. That I'd point out is where a lot of money is made, typically in the market direction model, and you don't want to be shooting the model in the foot, especially during these critical periods. They might only occur once a year, but that is the strength of the model, and I wouldn't want to do anything to upset those true signals, because those true signals really will, you know, the model needs those true signals to make up for its string of false signals. In 2011, the model had a lot of false signals right into the end of July, but it was the August to October true signals that more than made up for its small little losses. So first of all, the fail-safes are important to keep your losses small during choppy periods like the one we're in right now, and the second thing is to keep patient with the model, because eventually it will hit the true signal, and when it does, that's when you're in the money.
Let's see, questions on more stocks. Everybody wants to know NSM. I think what you had yesterday was a breakout from a 3 weeks type sort of flag formation. This is kind of funky to look at. Let's see, I'm going to get this back up here too so we can see what's going on here. But you look at this, I'm going to put this on a weekly and spread it out. But you can see you get this flag, you close in here tight for 3 weeks, big supporting week, and holds in here, and now you're breaking out. So you had a buy signal, I think, yesterday. Wasn't a pocket pivot because it didn't exceed this volume. But this was a pocket pivot off the 10-day. The only problem with this, in my view, was that it occurred on the Russell rebalancing. It looked like these guys got a bunch of volume as a result of that. And I'm not sure if it would have made it otherwise. But I think the best way to confirm the validity of this is by this breakout, which is a clean breakout. It's above average volume. It's over twice average daily volume, and it breaks out. And today it's continuing higher, even in the midst of a lousy market. Yes?
You can see that on the Russell rebalancing day. If you look at an intraday chart, that last bar is effectively 1.5 million on the Russell rebalancing day. So then you can go ahead and just subtract, I'd say maybe 1.4 million or 1.3 million from the day's total and see if it's still qualified. That's typically the technique.
And it didn't. So on that basis, though, you could say that this breakout is a reason to be owning the stock, and it seems to be acting okay so far. I mean, it's an interesting contrarian move in the stock when the market is getting whacked. So I think this is definitely was a buy yesterday. So, Dr. K, at what point is a pocket pivot invalidated or considered failed? Undercut of the related moving average or undercut of the low of the pocket pivot, or what? For example, should the fire PP have been sold when the 50-day MA got undercut at the 5086 low? Am I reading that right? You know, one thing I hate about this is a tiny little type where you guys IM. I don't know why GoToWebinar does this, but I think it's something I'm going to mention to their tech people next time I talk to them.
Okay, so we had a pocket pivot on June 26th in Fire.
Tuesday, yeah.
And so let's say if I bought a position in Fire on that day, then in this chart formation, my stop would be under the low of that day because of this chart formation. I mean, we're talking about a stock that now is going back below the 50-day and then undercutting the low of that day. So I'd put a very tight stop in, probably at 50.8.
Cool. Okay. Yeah, I don't really care for that. That should have been moving higher. That's another stock you can take off your buy list. Bill, can you talk about how you use volume drives to inform your decisions? Does it always indicate, or can it say? I mean, all I'm looking, I don't know. I think you're trying to overthink this. You know, like, let me just read through this. Can you talk about how you use volume drives to inform your decisions? I.e., does it always indicate a pending reversal? Can it signal a resumption of the trend may be imminent instead? Also, does the same decision process apply intraday when timing entries or exits? You know, let me use an example here. Here's a stock. As you see, Mellanox is pulling back and it's drying up. So in my view, the pullback is normal and that looks constructive because it's drying up. If you get an extreme dry up, if the trend is going to turn, that's usually where it'll happen. At least that's what I've noticed. And it works the same way on the short side. If something's rallying and you get a dry up at the peak, you know, let's take a look at VMware. Kind of like, you know, you see this, let's see, I'm going to try and find a good spot in here. But you can see even here, this thing kind of is, I don't know, this is not a good example. I wish, has anybody got a good one out there for a volume drive? The idea, though, is that if you're moving in one direction and you suddenly see a volume dry up in that direction, so in other words, a selling day on light volume, then you conclude that maybe you're drying up here, and so the thing, you're running out of sellers in this case. And the opposite is reversed or true for a short sale. So you just could take a position there, but it's not anything that's 100% guaranteed to work, or you know, it's going to produce big results for you, and you're going to make a ton of money every time, and they all turn exactly after. But generally, where I'll start pinging something on the short side, just taking low positions and hitting it, something that's rallying up. I'm trying to remember, there was one recently that worked pretty well, and I'm trying to remember what that was. Let's see. If I go back to this one, that was actually pretty good, but CRM maybe. You can see CRM here, and this rally is rallying, but you can kind of see here there's a real weak volume in here as it's trying to hold above the 20-day. It moves up intraday, and there's weak buying volume. That's kind of a dry up and tells me this rally is probably running out of gas. Now the stock's breaking down, But that shows you how I would use it in terms of shorting into a rally, and it's pretty simple. Even here you can see this is a very weak day right there, and the volume's really low, and it reverses down there and then undercuts and bounces back. This is still pretty choppy. The short side in the market to me is very dicey. I don't see a lot of setups. Maybe this is setting up CRM. You know, we looked at VMware and F5, and those have produced some results so far, so if anybody's shorting those or making some money. But in terms of getting a big downside move, I don't know. I think you're dealing with a lot of chop and slop here, and that's really the main concern for me on the short side, is that they're going to ramp something the other way. So I was thinking today you might have a Supreme Court decision that strikes down Obamacare, and I got to admit it's a little bit of a shocker, and I thought you might could get a market rally on that basis. But that does not seem to be happening right now, but we'll see how things pan out. Because like you said, you could be bringing it more into the focus of the election in November, and that's what the market will start to look at, especially if you don't see a continuation of selling today. I get the same opinions on Fox News. About what? About Obama being, his policies being that. They're not opinions. I think factually that the policies are oppressive, and you can see the reaction from business. And business owners anywhere will tell you that this is not a good environment for businesses, and they are holding back on hiring because of Obama's policies. So, you know, I think it's really trite to oh, that's Fox News. You know, I really think people don't know what the hell they're talking about. As traders, we're interested in the objective evidence and how that creates underlying conditions that are either favorable or unfavorable for the market. And we already know that Obama's policies are not working. So we tend to think that you'll have an inflection point in the market if there's the view that Obama's out of there. And I just think that's probably what's going to happen. So it doesn't mean I love or hate Obama any more or less than I love or hate Romney. I don't care for any of them, to tell you the truth. So, Trader Vic, somebody says that's Vic Sparrow. He wrote the book Methods of a Wall Street Master. That was one of the first books I ever read on the market, and I thought it really framed the problems and the basic underlying concepts to investing in terms of understanding underlying conditions and understanding fiscal policy, monetary policy, and putting that all together. And I know, Chris, you're a big fan of that book as well, right?
Yeah, I'm actually. He wrote a second one, and it's quite. Yeah, it's quite Trader Vic 2, and it's quite theoretical. It's very densely packed, but it's correct. And I don't understand why universities. Well, I do understand why, but I'll say rhetorically, I don't understand why universities across the U.S. Don't have that book as required reading for every Economics 101 class. And of course, yeah. the reason is because the political textbook system the textbook system in the sciences or the liberal arts across the university system is very political. So that's why a lot of good texts don't make it. For instance, Feynman's excellent work in Physics 101. That should be in every physics classroom, but instead physics classrooms are mired in these horribly written physics books.
Yeah. Somebody asking about Westport Innovations. I don't know. I'm not. This is a big gap up company losing 42% negative earnings growth, so it's gapping up here. But I'm not a buyer of this. How about you, Dr. K?
Not a chance. It's more of a bottom play, and I'm not interested. Not especially in this environment.
So let's see. NetSuite pulling back, holding the breakout so far. It doesn't look like there's anything really wrong here. So. Can't really say. Somebody asked about Alexion again. I think we covered that. It's just holding the top of the breakout. So you can see some stocks are holding up. So it's not like it's the end of the world. Dollar General, I think they missed their numbers today, right? Was it Dollar General? Yeah. By a penny, a whopping penny. And so the stock tests the 10-day moving average. It's already up a great deal, so it's entitled to a pullback. Nothing really special there. Ulta we talked about. Philip Morris. I'm not really a buyer of Philip Morris or Altria Group, because they make cigarettes. I remember back when I was a broker, one of my clients was River Phoenix. Some of you might remember him. His brother Joaquin Phoenix is a kind of a spaced out character these days. But River was a young guy back then, and his career was up and coming, and he died thanks to a speedball overdose in front of Johnny Depp's bar out here in West LA called the Viper, or the Viper Room. And I remember his mother came up from Costa Rica in their Gulfstream jet, and she got mad. I guess he had a managed account through Merrill Lynch, and they buy oil stocks, and they had Philip Morris in there too. And his mother flew up on her Gulfstream jet, which runs on solar power, right? And she was very upset that he owned oil stocks and Philip Morris. So I'm going to say I don't want to own Philip Morris. How about you, Dr. K?
Yeah, I haven't looked at that one in quite some time.
So, I mean, you got some pocket pivots here. If you bought it here on this base, it looks like it's a defensive play, so it's been moving up. And I don't know, I smoke tons of cigarettes every day. How about you, Dr. K?
Not much of a smoker.
SLV short, why? I don't know, because it's breaking out to the bottom. My view is when SLV becomes obvious as a short, it probably isn't. I do think that Obamacare and this confirmation of Obamacare, what it essentially does is it puts the government in the business of borrowing even more, and I think it's going to continue. The money printing, there's been a lull for the precious metals, but eventually you'll see some of these turn. The question is, in the short term, weakening economies globally in Europe, in Asia, and potentially in the U.S. Continuing. What's the outlook for commodities? Dr. K, you want to go over the gold situation? I have to take a quick restroom break.
Sure.
In 30 seconds. Okay.
Yeah. Essentially, I think we have a couple of very important variables. First of all, you have, on the one hand, you have a recessionary environment in the UK and in more than half the Eurozone countries, and the U.S. is probably going to follow since all of these countries are connected. And, of course, that's going to bring China and India, the rest of the world down. So assume that the world is going to be more or less in a highly recessionary environment, since part of it already is. And that's going to drag the demand down on commodities. And so the price of gold and silver and wheat and cotton and all the rest are going to get dragged down as a result of a recession. Now the question is, do central banks step in to prop the markets by printing money in a recessionary environment? My guess is they want a foot drag. Merkel in Germany doesn't want to print, and the Fed in the U.S. certainly doesn't want to print unless they have to. And what will make them print? Well, crisis situations like the Greek elections. If they had gone awry and the markets had sold off heavily, I think the central banks did say they would act in concert to support the markets. So I think we need to see crisis situations for the central banks to act, but I think they're going to foot drag otherwise. And what we could see is a slow, painful recession where markets have this 1981 to 82 or 83 to 84 situation. 81 to 82 was a pretty painful recession, and the markets took it on the chin for a good well over a year. Maybe we're going to get one of those situations. I don't see the central banks acting in concert to reverse a recession because they've never done that before. But I see them acting in concert to reverse a crisis situation. So all that's to say that the short side may be the place to be in the next many months, simply because the odds of a recession spreading throughout the rest of the world are growing increasingly higher every day. And all that's also to say as far as the price of gold. Gold and silver are commodities, and they can get dragged down with the rest of the commodities basket in the event of this recession that's taking hold slowly but surely. And quantitative easing will not necessarily be there to prop up the prices of these hard assets unless we're in a crisis event.
Let's see. Somebody asked about O'Reilly. What is it you want to know? It's a big gap down, so there's no reason to be in this stock. So we've never really cared much for the stock. Oh, I like this. Someone says, Gil, I know you like to kid Dr. K on better investing through statistics. You mean the statistical hubris model? But for someone who does not have time to follow the market all day and is sort of lacking experience and feel that the two of you have, do you agree the MDM and UVXY models are the best alternatives? Alternatives to what? That's what I would know. I mean, I don't really subscribe to the UVXY model because I trade it myself using my own system. So, and since it works for me, I'm not letting anybody else have it because once I do, it won't work anymore. But I don't know. Do we agree that they're I'm not sure what I mean. You want to answer that?
I was just going to, yeah, sure. I was going to say that now. First, the UVXY model is still a work in progress. Now, from these research studies often spawn new studies, and there is a new study, although, again, this study that I'm doing is only serving to enhance the UVXY model. It's a very short-term trading model that would be very impractical to share with anybody, simply because I don't think, you know, it's like Gil's what Gil's doing, but it's not related to what Gil's doing, but it is. It's a cousin, shall we say? But they're not practical in terms of what most people, you know, most people have jobs. But what I'm seeing is that this particular offshoot that is working so far in real time on a short-term level can serve to enhance the UVX model. And so once I am satisfied that the two models work together well, then I will start issuing signals on the UVX model once again. As far as the MDM model is concerned, as you can all see from the results, you have to be on top of it when the model issues a signal, otherwise there's a time slippage. Volume slippage you don't really have to worry about too much. I've noticed when I have traded on a signal, the volume slippage is non-existent. It's really a factor of time slippage, especially if you're trading a 3 times ETF and the market happens to be moving fairly quickly at the time the signal is issued. And as far as choppy, sloppy markets like the one we were in 2011 and the one we're in right now, the model's going to have a share of false signals. You have to be able to withstand those drawdowns. If you look at the results page, you can see for yourself that the drawdowns, especially in a 3 times vehicle, can be quite steep. And of course, that's made up for it with the true signals, where the draw ups, shall we say, the profits are going to outweigh, based on these signals, the false signals, the string of false signals. So the key is, if you want to follow the model, and certainly some people have a portion of their account allocated to just the model, you set aside a portion that you can withstand those drawdowns, and you can put the whole thing in on a buy signal or the whole thing in on a sell signal. And then you should be able to more or less mirror the results page that you see on the website.
Okay, let's see. Let's see. Well, tell me this about Oracle. Do I want to short Oracle? I don't know. You know, I wouldn't short. Oracle wouldn't really make my list of shorts, mainly because it hasn't really been a big leader for a long time. If we go to a weekly chart, I'm just kind of, whoops, try to. I mean, the stock's been in this big downtrend. You have 1, 2, 3 legs down. If it's going to break, if you want to short it and you think it's going lower, you'd short it here, I guess, but I'd use a stop at the 200-day moving average. But the one thing is, you have 1, 2, 3 legs down. It almost seems to me like it's washed out on the selling. And Oracle's a big holding. Remember also, Oracle has 4.883 billion shares, so almost 4.9 billion shares with the B outstanding. So if institutions have sold 100 million shares lately, they're just that's just an allocation shift. It doesn't mean that it's some big hot leader that's being distributed and unloaded right now. And as a big kind of big cap name, I think that you're not likely to see it break down. If you did, it probably would test these lows, and that's probably the most. If that's worthwhile shorting, then go for it. I'd rather go after names that are high flyers and not so these thick old leaders that, you know, if you look at this thing, it's just been rolling over for a period of time. This probably would have been better short into this V up here, but that's neither here nor there. Let's see some other stocks going through here. What kind of analysis do you use for dividend-paying stocks like AGNC when the dividend is paid and the price drops accordingly? I don't really pay attention to it, so that's kind of overthink. You know, I don't know. If something goes ex-dividend, it usually drops in price, but you're not getting the dividend. So there's nothing that I look at. Do you look at anything, Dr. K? No.
No.
Seems like overkill. So would you short Humana? I saw the CFO or somebody on TV. Would I short it? Looks pretty nasty, but it's finding support off the lows. So, you know, I don't know. I still think, you know, these stocks, maybe this stock knew that there was going to be a upholding of Obamacare, because it already started to break down, and it's already weak on that basis. So this is a possible short here. You probably use the high of the day as your stop if you wanted to. It's kind of got that, head, and here's a right shoulder maybe coming over. But the one wrinkle here is that the market can start to look out further and see that Obama's out of office in November, and that you're going to have a Republican majority in the Senate possibly, which is then going to repeal Obamacare. So I really think it's being left up to the electorate, and we'll see how that goes. So you can't make any assumptions, but if you're looking for a setup, maybe this is what the sort of situation you're looking for, but it is as a result of today's news. So if it's not really breaking down from here, I'm not really sure if it's going to, but that's a pretty ugly day. So you could always take a shot. Let's see if you're shorting it in here, 77.50 up to, say, 80 at the 50-day, or I don't think I'd use the high of the day, but say 80. That's a reasonable stop, like 3-4%. But within this pullback, many leaders are breaking down. Yeah, you're seeing some leaders break down. So that's what happens when the market's correcting. So whether some of them fill out in form bases, we'll see what happens. I've been noticing Amazon had a little pocket pivot here. Nothing major, but it's kind of holding up in this pattern here. Look at Intuitive Surgical. It's in a base, breaking down. The volume isn't picking up hugely, but you would expect this reaction from the news today. So kind of is what it is. And like I said, you don't have to be necessarily long this market or trying to buy into this market, but if you have some stocks that have worked, and I have several stocks that are up a bit from where I first bought them, they're not getting clocked today. Unfortunately, they're sitting within their ranges, so I'm hanging out. And you are seeing the market come off the lows so far. So yeah, there's been a lot of breakdowns, and when that all becomes too obvious to everybody, a lot of times that's when the market's sold out. Let's see. Short Monster, if it goes through support, I wouldn't short Monster here. I mean, there was a sell and a 10-day moving average violation, or you could use a 20-day moving average, whatever you want to do. Now you're breaking down to the 50-day. So if you're using that as your ultimate selling guide, then today would not be a violation, but it would be the first close if it closed under the 50-day moving average. But I think this is a sell a while ago, but I wouldn't short it right here. I don't understand how that's even a short position. You have a stop straight up. Maybe this turns into the right side of a head, and so you have, let me blow this up, so then you have something like a left shoulder ahead, and now you're going to form a right shoulder. But you're undercutting these lows, so I wouldn't make any assumptions about shorting it here. It seems a little bit too early. What is the name of the book? Which book is that? Trader Vic's book? Just look for Trader Vic, and it's Trader Vic 1 and Trader Vic 2. Austerity policy in Great Britain has led to a recession. What policy would you want for the U.S., Dr. K? Free money for everyone, free gas, free food, free clothing, free housing, free everything. I want everything free for the U.S. I think, and Obama can deliver. He just waves his hands and it's all there, right? So.
Well, this is the thing. You got to. These countries have to take their pain, and the pain is usually in the form of a recession. And the problem is that you can't have a halfway deal here. You have to have it all or nothing. Otherwise, you have a Japan situation on your hands, and you have a lost 2 decades where you go in and out of these bear markets. And the market never gets things back together again. Essentially, what these central banks are doing, what austerity is the opposite of printing money. Just for those who might be fuzzy on the concept. And the problem with all this money printing is that if the world economies were a patient with a brain tumor, the central banks are injecting the patient with morphine, and that makes the patient feel better in the short run, but meanwhile this tumor is getting bigger and bigger. And so the price to pay for these temporary feel-good solutions, i.e. quantitative easing, without dealing with the real problem, is ultimately catastrophic. And so the issue is why don't we all practice austerity? Well, when austerity has been practiced, like in Scandinavia, that back in, I think it was in the 90s, Scandinavian countries were in big trouble. So what they did was they took their losses and they suffered a lot of pain for a few years. But then they started the boom once again once their zombie businesses and banks were pushed out of the system. And the problem is we're not doing that because the people in charge are politicians and they want to get reelected. So if they take an austerity measure, then it's going to push the country into recession, and they're not going to get voted back in. But that's unfortunately really what's required here. If you really want things to be to have prosperity within, say, the next few years, you're going to have to take these countries going to have to take pain in the form of deep recessions over the next 2 to 3 years. And in other words, there's no easy solution. There's no easy answer. But that is the best that's the best answer in terms of getting things back on track in the shortest amount of time. The way we're doing things right now with all this money printing, we're not going to be back on track for another 10 to 15 years, maybe longer.
Yeah, the so-called lost decade, right?
Yeah, and Japan lost 2 decades now.
Yeah, someone asked, is Coinstar more actionable because of the gap up? Because of the gap ups it had during the run-up before the base? Let's see. I don't know exactly. It's not anything I was looking. I mean, these are constructive. I thought the fact that it was holding in the base, you weren't getting a lot of selling coming up, and it's one of the better acting stocks. I kind of like the story here, and I think that this new direct-to-retail kiosk concept, which you're using with this Ruby system for Seattle's Best Coffee, where they're selling coffee for $1. Kind of like the way they had DVDs on the Redbox system going for $1, rented for $1. I think that's all a very compelling business model in a feudal economy. I think the consumer's trying to look for the most bang for their buck, and I think that's a compelling concept. And right now they're working on a whole bunch of other areas using the same concept, and I think it's even a kiosk where you can take your old cell phone and get cash back. Another kiosk where you can take in gift cards, and maybe you have a few bucks on each one. You can consolidate them into one, and other stuff like that. And I think that's a viable concept. And they show 200-something% earnings growth. I think it was 260 or 206. What was it? 202 actually in the most recent quarter. And if you look at the earnings growth in Coinstar, say the last, you can go back several quarters. I mean, 10 quarters or more, and you're looking at 40 to 151% earnings growth. So let's look at the last 6 quarters: 202, 47, 79, 151, 53, 84. You keep going back, 74%. And meanwhile, sales have been accelerating over the last 3 quarters: plus 2.2, plus 3.3, plus 3.4, and you're seeing an increase in earnings and sales, and it's starting to re-accelerate. It looks like. And with everybody short this thing, 8.7 million shares short as of the middle of March on a 30 million share float, the market turns. I think it's one of my favorite stocks. And I don't think anybody gives it any credit, especially when so many people want to short it. I like it here. I'm not really paying attention to the gap ups, although those are constructive, because I don't think that is a viable gap up. But what I think is constructive here is the way it's moved up as the market's gone rolled over, and it's held up and moved to highs here. And just not quite getting to a new closing high here, but it's acting okay today. So I own the stock right now, and we'll see how it plays out. But I own it, on the pocket pivot the other day. Mellanox we already covered. Someone says family dollar, family dog, as we used to refer to it. Missed earnings, so that's one coming down. ERF chart. What's ERF? Enter plus. That's a dog. I wouldn't touch that with a 10-foot pole. Let's see, what else? To the average Joe, who only knows of the greater access and nothing else, especially cost, and given the demographics of this country, I would say that this is very appealing to the majority of that demographic, and they want it. Dollars flowing from the haves to the have-nots, and it will unfortunately make Obama unbeatable. Yeah, I guess so, maybe. But I don't know. I don't think so. Let's see. I noticed the last few pocket pivots in N, Alexion, and Ulta were slightly extended off the 10-day. I know it's contextual, but is there any rule or guidance on how far off the 10-day the action becomes too extended to be considered a pocket pivot? That's one for you, Dr. K.
Yeah, this is the question. Really, is in context with the chart. How volatile is the chart? If it's a very volatile chart, then you have to give a larger percentage in terms of the limit on what you would consider an extended pocket pivot. And then if it's a very quiet chart, then you should probably be buying that pocket pivot within 2 or 3% of where it should be bought. And ultimately, the final rule is never buy a pocket pivot where your sell point is going to be beyond your risk tolerance level.
Yeah, and this is a pocket pivot here, but it's not. It's right at the 10 days, so that's not extended. Here you have a pocket pivot that's extended, and that's not really one I would be buying. So that would probably be considered too extended. But you can kind of get an idea of the movement. Sometimes also, if you had closed the prior day right at the 10-day and you have a little gap up, you might just consider that a move off the 10-day. So you might make an exception there. But you can always control your risk if you're not convinced about a particular pocket pivot and you think it might be too extended from the 10-day moving average, and you just take a smaller position. So the average Joe sees Obama as the common man who's not having their vote is equal to yours, and it is this demographic. Okay. You know what? In my family, there are a lot of people who are common Joes. I may be the only one who has money in my entire family. It's a huge Mexican-American family, and they're all average Joes with average jobs. And I hate to tell you this, but they don't care much for Obama, and it's gotten worse. And even my family members who liked Obama 4 years ago, right now pretty much consider him to be a pathetic piece of blankety blank. So, I always go back to my own family where I've got access to a couple hundred average Jose's, and I think they don't confirm what you think about Obama. So I don't think the average person wants a handout. I don't think the average American is looking to to become a welfare recipient or to be nursed and coddled by the welfare state. I think human beings, the spirit of humans, is much greater than you think, especially for average Joes. And I think some people in my family would take offense at that because the stereotype is that the average Joe is a lazy bum who just wants everything handed to him, and if you have a president who promises that, then everything is wonderful. I don't necessarily think that's a pat conclusion. I mean, it's a good point, I think, but I don't necessarily think that's a good something that's going to definitely pan out. Go ahead, Dr. K.
It's a bit of a slippery slope. Part of the problem is that if as the welfare state increases in prevalence in a society, more and more people, also through just observing their peers, are seeing, oh well, they're not working and they're living off the dole and they're doing whatever, partying, whatever they want to do, and because they have all this free time on their hands and they don't have to look for work, or at least they're not coerced into it. And so they start to think, well, I want to do the same thing. And that's really the great failure of communism and socialism in all its forms. The masses just start to get lazy. The government can affect the behavior of the masses just through public policy. And it's not that these people are inherently lazy. I think ultimately the human spirit is incredibly strong, and people want to do good work. And Einstein said, if you want to make a person happy and fulfilled, give him good work to do. I think that's one of the life's secrets. So if you have this massive welfare state, yeah, people are living on the dole and they're not working, but I don't think they're fulfilled, they're not happy, they're not content. And the problem is that it can spread like a disease, this kind of mentality. And it's really comes down to government policy action that allows this to happen among the people that it governs.
Yeah. So, anyways, what I think is interesting is a lot of the rich white liberals in West LA are big Obama fans, and there's nothing he can do wrong. So, I mean, as far as I'm concerned, all politicians do almost everything wrong. So, I think they're deluded, but I find that to be more the case, that the working man really isn't all that enamored with Obama. Maybe the unemployed person is, but I don't know. What do you think about Trib? Somebody asking. Trib is way too thin. I trade 45,000 shares a day. I'm not touching that with a 10-foot pole. I mean, nice pattern and all, but who's buying that? Are institutions buying it? In my view, if it was a big institutional stock, it'd be trading more volume. Numbers look good and everything, but well, not really. 12% earnings growth, and you got 29 mutual funds own it. Yeah, I think they just have a tiny weighting. I wouldn't touch this thing. So Ellie is another one. Ellie Mae, computer software financial. It's another thin stock, but this has pretty good numbers. Earnings are up and everything, but kind of thin. Trades 305,000 shares a day, so I'm not really a big fan there, I'd have to say, for the reason that it just trades very thin. But maybe one to keep an eye on. Was a recent new issue at $6 last year in April, and formed a nice tight base. You can go back and look at this is a nice weekly chart, so that looks pretty nice. Nice tightening here. This is where you should have been picking it up. So Here it's acting okay, so it's getting better. It's not one I would go for, but it's I can't say it looks all that bad and the numbers are all that bad. Maybe there's a good story here. The weekly chart looks good, but I'd definitely like to see an increase in the average daily volume as confirmation that institutions are in the stock. There are 67 mutual funds. They own 2.6 million shares, so about 25% of the float. So that's pretty decent. It's not too bad. So not too bad. Might be a name that continues to develop, but right now it's still low price stock trading very little volume. So that's the only thing it has going against it. Other than that, it looks okay. Has portfolio simulator given up for the rest of 2012, or just laughing at most of us chasing short-term moves of chop and swap? He is actually getting a big kick out of the way the market seems to chop everybody up, and he has been out. But I probably should, we were going to make an announcement about this, but we're going to discontinue that feature, mainly because Follow the Stock and Portfolio Simulator Dude conflict. That's a big conflict of interest with the new Managed Accounts program, Strategy C, which is using stocks and building equity portfolios. So now if you want to see what Portfolio Simulator Dude is doing, it's going to be Ross Haber as Portfolio Simulator Dude running Strategy C for the VMAPs, or the Virtuous Self-Investing Managed Accounts program, and that's where that's going to go. Because it is a conflict of interest, and from a compliance standpoint, we have to deal with that, and that's going to mean sending Portfolio Simulator Dude on his way. But hey, if you want to see what the kind of portfolio he might be building, you can see what Ross has going in Strategy C by opening an account. So sorry for the shameless pitch, but that's really what's happening, and I just want to explain that in that context because it is a conflict of interest, and from a legal standpoint, I think that's confirmed, and so we have to discontinue that. So, but that said, he's actually not too dumb for being out, So somebody asked about Facebook. I'm assuming that's an old question. I mean, it's forming a little handle here, so maybe it becomes viable in here. So, watching it. I own some of it from 27, so I've got a little bit of room here. When the people find that they can vote themselves money that will herald the end of the republic, then yeah, Alexis de Tocqueville also had some comments on that. Thomas Jefferson, and that's basically the idea that politicians can give everything away and win votes that way until the bill comes due. Congress may also lay and collect taxes, duties, imposed, and excise. Somebody's citing the Constitution. Put simply, I like this. This is a good point. Put simply, Congress may tax and spend. This grant gives the federal government considerable influence even in areas where it cannot directly regulate. The federal government may enact a tax on an activity that cannot authorize, forbid, or otherwise control. These political debates are pointless. I agree. Just watch the market. TCBI. Let's get back to that. TCBI holding the 10-day. Not too much else to say. But this is Texas Capital Bank shares. Nice little small bank. I kind of like it, and I think it acts pretty well, but not one I would buy just because it's kind of thin for my blood. It's getting a little better. 453,000 shares. You might be able to buy it in a smaller account. Acts okay. Can't really say there's anything wrong with it. Somebody asked, would Romney be able to enact austerity measures as a first-termer? Obama could as a second-termer, but probably would not be inclined. I don't know if it's necessarily austerity measures, but just a change in policies that allow the business community to get off. They're all laying back and just waiting, and I think it's just a matter of them having sort of a green light in terms of being able to figure out what federal policy is going to be or government policy is going to be, and then they'll be able to act. I think Vic Sferrandeo's argument on CNBC the other day was very compelling in that regard, and so that's kind of how I'm looking at it. When does Strategy C become available? Well, it is already. So Monster being added to this S&P today, it doesn't seem to be helping it. Let's see, is it? Nope. So much for being added to the S&P. NetSuite we talked about. So you can see, a lot of stocks looking pretty kind of crummy. And maybe some short targets out there. We gave you VMware and F5, and those are working, and that's about it. Other than that, we'll see how today pans out. But right now, I'm looking at how's volume panning out right now, Dr. K?
It's lightening up a little bit. 7% on New York, 3% on Nasdaq.
So, like I said, I think some of these stocks, watch for pullbacks if the market holds, and you can come into them. You know, I like Coinstar. I think that's a good stock. I like Mellanox. I'm watching Facebook coming in here. LinkedIn continues to hold the 50-day, although it looks like it wants to go through. So just keep an eye on it. You know, you may not want to step in and do anything. See what happens going into the end of the day. So as far as myself goes, I cut back a couple of positions, but holding on to the things that are still working. Coinstar's still up quite a bit and holding up, and Mellanox trying to hold up. So, you know, to me they look like normal pullbacks. If the market starts to get weaker, I'll just blow them out and go back to cash. Not a big deal. So just waiting to see what happens. But I don't really like to operate on too short of a fuse in this environment, especially on a day like today, because you really don't know how it's going to pan out. Last week, we were doing the same thing, but towards the end of the day, you started to see things close at the low, so you kind of had to back away, and you just raised cash, so it doesn't really cause too much trouble. And I think you have to remain flexible in this market, so it's funky. And right now, you're on a sell signal, so if you want to, you can go with that. So far, that seems to be panning out and holding up, although you are, 25 points below the NASDAQ, where the sell signal was the other day, and you push back up above it, so you're still a little choppy. And you could break to the 200-day moving average, and maybe that's where you bounce. So it's kind of all up in the air right now. But I definitely would not be, fully committed here. I'd be looking to raise cash as positions weaken and just kind of back away. But I'm not so sure yet that I want to go a whole hog onto the short side. Although there are a couple of names, F5, VMware, and I've traded these back and forth a little bit when they break down, and they have come off a little bit. But nothing terribly exciting. So. The website says on a buy. It's what, the market direction model's on a buy?
No, it's on a sell.
No, on a sell. SCXI, somebody's asking, it's holding the top here, so that's trying to hold in. Not my favorite name, but it's holding in. I'm just going to cover a couple of last stocks people are asking about. Quadruple W, web.com. This stock's been hanging in okay. It's coming down. Here's your breakout point, so it's pulling back, with the market. So if it gets worse and things start to blow apart, you just go cash. It's not that hard to figure out, I don't think, but we'll see how this goes. Right now, volume is declining. You're going to test the lows. So let's just look at the futures here on a 5-minute. So here's your low on the day, and now you're coming back to test the lows. You're not seeing heavy volume on this retest, so kind of watch and see how that occurs. That's something I watch for. A lot of times the market will form a low, retest, get no real volume selling, everybody realizes the thing isn't going down anymore, and you start to turn back the other way. So it's kind of fluid, and that's kind of how we are handling it right now. Does Dr. K, last question, does Dr. K still like EDS over TZA?
Yeah, well, EDZ is going to give you more bang for your buck, basically. It has more time value when the markets are heading lower. EDZ tends to outperform, so I tend to prefer EDZ.
Cool. Okay. Myself, I don't really have any preference, so let's see. How about TQQQ? Or, I'm sorry, not SQQQ. Boy, I have a hard time keeping these straight. It looks like EDS kind of, I don't know, they all look the same now on an intraday basis. Let's see on a, let's go back to a daily. Popping up. I don't know, EDS has resistance at the 200-day moving average, Dr. K. Could be trouble. Let's see, skew, as I like to call it. That's trying to break out of this little range here, so coming up off the 50-day, so maybe that's better. I don't know. And we'll see how things go. Kind of fluid right now, so just keep an eye on things right now and staying flexible, and that's all I got to say. Anything else, Dr. K?
I think we're good.
All right. Thanks, everyone. We'll catch you guys next time. Good luck.
So long, everyone.